And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, September the 12th, 2022. The market continued to gap higher today, although it wasn't necessarily a gap. That happened in yesterday's Globex opening. And upon reflection, I think a great deal of that gap was due to the fact that the futures had rolled out to the December contract. And it was quite amazing today just to kind of witness that roll in the S&P. Usually, I mean, we're looking at, in the NASDAQ, we're looking at a difference of just a few dollars, $5, $6, maybe $7. Whereas today, you can see if you had to sell that at 44 and then you need to buy back this particular contract, you're looking to do that at a substantial amount of money. And that's the way it stayed all day. So I think a lot of people got caught up in that, and it was kind of amazing. And I think that is really what has propelled a lot of this upside move. Plus, just the fact that a lot of people were moving back into Apple, for example. So that roll will continue as this thing winds down and expires on Friday, along with the options. So we have all of the Friday options coming up as well. If we just take a peek at Apple, you're going to see on the 16th. So the 16th of September is the monthly expiration cycle. And so now that's what we're all going to build towards. It's a bigger expiration, and you can see open interest is large. So there's going to be a lot of either coming off or it will roll out to here. So we'll be paying attention as to what, if you're an options trader, you're going to be able to see what's rolling out to the next month, what you're willing to carry forward, and what will actually come off here. This was an incredible rally in Apple today. And so that did affect, of course, the S&P and the NASDAQ. So where are we? Where does this all go from here? The rally itself off of 38.83 is now in its fourth day. So we've had 4 days of upside movement. And this is 38.83. And that is from the 7th of September. And so 1, 2, 3, 4 on the 5th day, a week later, trading days, right? The market is now starting to just kind of correct a little bit, but I'll tell you what, I just really think that it's likely going to continue for a little bit. But we have 4 solid up days, 4 strong up days. Today was another strong day. So what do we have going on here in the S&P? We're on the daily chart. There aren't any changes to make. I'm continuing to leave this up because we're now getting to that level where either it's going to be intermediate 1 being our intermediate 2 going to be complete, or this intermediate B wave is just going to continue and going to take us up to these upper levels. And that'll likely get us above there. Now, I have put on just straight retracements for this decline thus far, which has now been labeled as intermediate wave B or intermediate wave 1. So either case, these retracements apply to both. So here we have the 618 retracement level, where intermediate wave 2 would be equal to 0.618 of intermediate wave 1 at 41.58, I'm going to call it. So we really have that from 55 to 60. Give it a nice $5 window. Above that, we have basically 41.98, which is where the 200 EMA is sitting on the hourly. Oh, this is the daily chart. On the daily, we have the daily EMA 200 coming into play now. So as I discussed yesterday, the moving averages are starting to turn themselves around. Here again, the 20 was sitting below, needed to crest and come and turn higher. It did. It's now above the 50 EMA. The 8 has come above the SMA and heading for there. So I suspect that that's going to be the case. And that's going to put us into alignment to get up and give a test to this 200. That's my feeling with what we're seeing in the rally. Now, again, intermediate wave 2, if it was an intermediate second wave, yes, it can get above here, but I'm really looking for this zone, 50% to 62% to contain the rally. We zipped above 50%, like, oh, excuse me, was that resistance? Boom, get out of the way. And we're now heading towards the upper end of the range, which is 41.58. Now, 4 days up on the daily chart would suggest that we get a pullback. How deep that pullback goes is going to be vitally important to the overall structure of what we're looking at here. Now, what else do we got coming this week? So again, last week, basically extremely light on economic figures. Tomorrow we have CPI. The Consumer Price Index comes out 5:30 Pacific time, 8:30 a.m. pre-market. Wednesday, we have PPI final comes out 8:30 Eastern, 5:30 Pacific. On Thursday, much more coming out that can really flip this market, that is going to give even a stronger read on what is going on with inflation. Now, market participants, they want to see some easing of inflation, some pulling back of inflation. And unfortunately, I don't think they're going to get that, but I'm sure they'll jump on whatever they can take. So I don't think inflation, we're not seeing it yet, right? Because we've got to the one where they're registering at 9%. It pulls off a little bit. Everybody jumps and goes running for it. And then they all have to go to the store. So the CPI, consumer price, is still going to show, I think, another major jump. That's my own personal opinion. I don't know what the consensus is, nor do I really care at this point, because nothing we can do about it. And the market will react as the markets react. But just so that on Thursday, we have jobless claims, Philly Fed. Those are marked in red. Red are market movers. We have retail sales. That's going to be big. It's like, okay, consumers, you happy with these prices? If you are, retail sales should improve. I somehow don't think that's going to be the case either, because it is now starting to hit home with us retail folk. We're the ones that have to take our hard-earned money and we got to go out and spend it. And so additional spending outside of what's necessary starts to be curtailed. That would be my take on that. Then also at 9:15, so again, before market opens, industrial production. That's an important number, because now we want to see, well, what's production doing against all of this inflation? Are they still producing at the levels that they were, or are they cutting back? We shall see. So those are all the balance of this week. So tomorrow's CPI. I'm going to slip down to the daily chart here and let's just keep on going. This is a tremendous rally. Now, the deal is, it's like, can I call it a third wave? Sure, because it would fit inside the move, but it would be a third wave only on a minor level, as if we were working higher in an intermediate C wave to complete that primary B wave. So again, each day this thing ticks up, that probability scale of that being what's in force shifts higher. And so right now it's 50-50, at least 50%. for either one. And as this rally continues, it's going to shift that intermediate wave one count further away from the front line, so to speak. So we need to consider still, how do we want to trade? Again, it's not that difficult for me to make that type of a decision because I am a day trader. Whatever positions I may hold on to outside of day trading are core positions that really go to a 401k or an IRA that is just very long term and has already been established as long term. So there's nothing short term. It's not like, oh my God, gold is going to go here, so I'm getting out. It's like, no, this has all been settled for me. And so I can come in and trade price action that's happening today, this morning, on the opening, et cetera, make my money and be done. When you're carrying a position and that position has delta risk, gamma risk, theta risk, which is decay, and an option, if you're long an option, it's going to lose money because it decays, price decays. It's a product of how the option functions. It's a product of volatility. It's a product of many things put together. Options are designed to go to zero. So in other words, they come out, and if it doesn't go in the money, it's not going to gain any value. So if you're trading in options, and how do you want to trade this because you've been set up for another major move down, you're going to get that move. It is going to happen, but is it going to come in the form of the intermediate C wave completing and then that B wave decline starts? Or is it going to come in the form of an intermediate second wave and just dump? Both will result in the same type of a move, by the way. Whether that C wave ends up here, I'd be looking for the next one to come in and just absolutely decimate the market. I really would. I don't use that word lightly. I'm looking for this to basically kick it off because now they've held it back. This was a big thing. It's like, oh yeah, it's starting now. And this thing rally goes back up all the way up to here, putting all of this into fool's gold, so to speak. The next one, oh my God. I think it will be a very, very fast, decisive move to the downside. And again, I know I say this was news generated. This was Powell's Jackson Hole speech combined with an expiration, an August expiration. Well, now we're building up to Friday in the September expiration. So a lot rolls around that because big positions in Apple, Amazon, Google, all of them, all of the stocks, the component stocks of the S&P and component stocks of the NASDAQ, the Dow, of the Russell, a lot of them can come off on Friday depending on where these things expire, what price it all expires at. That produces the volatility on that day. So here we are. What do we expect for tomorrow? So let me go and try to open this up and then bring it back down a little bit so we can take a peek inside. I'm still pretty okay with this being wave 1 of 5, wave 2 of 5, so out of 5, right? So I'm counting minor waves. Or if it is minor A and minor B, in terms of it being part of that intermediate one, right? So intermediate one's over, intermediate wave 2 in play. So it would be A of intermediate 2, B of intermediate wave 2, and this is a C wave. What can that C wave project to? Well, I can now put up one more set. I'm going to run it right from. So we would be, if this is like the intermediate wave 2, Then I'm looking for the C wave. And what is the C wave going to consist of? 5 waves of minute degree. But what connects it? This would be A, this would be B. So same Fibonacci I would use if this is the B wave complete here and we're in that intermediate C wave up to finish off that primary B, then it's going to be the same type of account. What's inside intermediate wave C? 5 waves of minor degree. There's minor 1, minor 2. We're tracking minor 3. What's inside of minor 3? 5 waves of minute degree. What can I expect? I'm going to run the same extensions. Wave 3 compares to wave 1. It's already zipped past 1.618. That's pretty strong for a third wave getting up there. And it's kind of getting hung up here at the 1.70, which is the upper level, what we call sweet spot, right? There's the actual sweet spot. But now it's one next level up. So 41.35. They got it up to 44 right off the start of Globex. Dropped it back down to 33. So we've come back below that level. But what's up next? On the larger move, it is, if we're comparing intermediate wave 1 or intermediate wave B, and what those retracements should look like, 618. So intermediate wave 2 would be 62% retracing of intermediate wave 1 at 41.58. Got to 44. 41.58, not that far away when this thing is like zipping in all over the board. And then we have 41.67. And then we got to zip out to the outside level to hit the sweet spot at 41.96, 4,200. Now we're using the next level up, the 2.382, which is 42.10. It's a very dynamic wave, either way. Characteristically, a C wave. Do I necessarily compare it to a wave 2? No. C waves would be more comparative to third waves. Big, massive, strong, quick. If it's destructive this way, if you're short, it's destructive. On the way down, if you're long, it's going to kill you. So same type of relationships or that we have between these waves still exist no matter which count is in. The fact that these are both intermediate degree helps out quite a bit in that we're not, fighting a minor against an intermediate. They're both an intermediate degree. So they both kind of can move together. But we're getting to that point where wave 2, ultimately, folks, wave 2 cannot break 43.28. Cannot break it. It goes above that, it's not an intermediate wave 2. It would then be the intermediate C wave. We're getting up there. I know it seems like we're miles away, but we might have said that last week. This is last Thursday at 11 o'clock. We were just crossing 4,000. Today in the Globex, we're crossing 4140. So fast moving market. Okay, so downside, I think, should be actually pretty limited. Again, as we start to come down, we look at this hourly chart. Up, 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 up. They all look at how this is in alignment now. And you see how they're all bottoming and turning, just heading higher, heading higher, heading higher. Now, they're not vertical, like going like this. They're very steady. And the rally is really holding the 8. And the 20 is not even getting challenged yet. So that's going to be our first hint that when this is over and we start to come down, how quick it drops and breaks back below the 20, and then in turn the 50s. Those are going to be pretty strong indications that these independent counter trend rallies are done. And now it's back to business. What's going to trigger it? I just went over a whole litany of stuff that's coming out this week. So we're on standby and we're just kind of waiting. Now you can see how it gets itself all wrapped up in an overbought, and then it dips real quick right there. That was today. Dipped, took us back below. Now we got plenty of room again. Buy it, buy it, buy it, buy it, buy it. So I think that we may or may not be done with excuse me, minute wave 3. In which case we still have, even if I say this is minute 3 and that was minute 4, and we're in minute 5, what is it? 1, 2, 1, 2, 3, 4, 5, a 3, 4, 5. So again, I'm getting to where I'm just completing the minor third wave, which would be part of the intermediate C wave count, or we're finishing AB and this is going to be C for the intermediate wave 2 count. So we're getting up there, which is why I'm going to be paying very close attention, because I want to catch that turn. I want to know, oh, we're not going to turn. This is out. I'm moving the B and we're heading. I'm likely going to go back above here. That's what's sitting out there waiting and still has not really been determined. Quickly over to the NASDAQ. The NASDAQ's a little bit steeper. You can see it's got some force behind it, but it's also got some force when they start to sell it too. Being in the market, I trade the NASDAQ during the day. So, oops, we got to bring that down a little bit. And there we go. So here again, this point is either the completion point for either intermediate wave B or intermediate wave 1. It's intermediate wave B of an ongoing primary B wave counter trend rally. The other side of the coin is that it completed intermediate wave 1 of primary wave C down. That's the dichotomy that we got going on here. Again, the height of this rally now is getting us into a position where it's at least 50-50 probability, and will now shift as if the expiration coming on Friday, as we're getting close to where this whole idea of which count is the one that's in force is reaching its due date. Because we know that here in the NASDAQ, the market cannot get above 13,741. Now, that's still pretty far away from here. That's 900 points from here. Excuse me. And so, can the NASDAQ do it? Yeah, it can. Whether it does it by this Friday or whether it does it by next week, it still can. But what we're going to find out real quick is what we can really expect from here. Now, these are just the retracements, NASDAQ retracements. And so we're not even here in the NASDAQ. We're not even at the 382 level, which is 12,942. Now, that's why here in the NASDAQ, the intermediate wave B still has a slight edge on the intermediate wave B completing here. And this is a C wave versus an intermediate wave 2. Even under a wave 2, I'm still looking for here, right? Most common 50 to 62% retracement of wave 1 for wave 2. Well, because it's intermediate degree, it's bigger, it covers more territory. Those are the potential. But we've not even gotten to the 382. Now, if this is an intermediate C wave going up to complete that primary B wave, we've got a lot other things going on. So let's take note of these numbers: 12,942 resistance, 13,258 resistance, 13,573 resistance. Okay, 13,800 resistance. Now I'm going to take those off, and I want to start putting on some little bit different. So we're going to put on extensions, and now we're going to put on for wave 3. Now the wave 3 here, we've already zipped past that higher sweet spot, which is at 12,816. We flirted and played around that all day long. So on Globex opening, it got to 12,865, I believe. And I think at 12,070, somewhere up in there, there was an extended naked point of control off of a weekly chart. So that's kind of still out there. And I think that's what they were really going for right now. And whether they get there, I don't know. Now, the daily chart here as well is showing strength by strength by strength. You can see 1, 2, 3, 4, so very strong days. This is not as cleaned up as it is over on the S&P, but it's getting there. So you can see that we still have everything all kind of moshed up here in a pit. The 20 is sitting between the two 50s. The 4 is zipping up. The 8's rising pretty strongly. The 200 is flat. So again, it all can change very quickly, but it leads me more to here versus here. So a lot of ground to catch if it wants to get up above here. It can. Now, I want to bring that back, finish that, bring this back down to the hourly chart. And now I want to take this one off because I need to be adding if that was wave 1, and then we've got a wave 2, and then we're looking for wave 3 down. It's a little bit more difficult. If I just put the straight retracements on there, come on. Let's see what we come up with. There to there. We have 13,045. That's the 618. Now, again, on intermediate wave 2, it's already above the 50, so it's looking good on that respect. Here's the 618, 13,045. That's up, would be up next. And then we have a continuation line at 13,200, 205, somewhere in that neighborhood. And that's where I think we probably would start to look pretty toppy if it was an intermediate wave 2. Intermediate waves, but second waves can come up and equal highs created at the starting point of wave 1. It just can't exceed the starting point of wave 1. That's been the general rule for the second wave. Once it does that, it's not correcting wave 1 anymore, is it? So there aren't any what people keep trying to ask me about irregulars within a wave 2 position. It's like, no, not to my understanding. I've never read anything by Elliott or anybody else that allows for that. So in the fourth wave, yes. In the second wave, no. So here we are. And that once it got above there, it would shove that, it would discount that. This would remain an A. This would remain the B. And we'd be looking for that C wave. And then you're looking for these. Okay. If it were to go to an irregular B. An irregular larger. So if this is the B, oh, excuse me, it would change. It would change a lot. But we could actually go back now. And let me go up 1 to the daily. Let me take that off. One more that I can put on, which would be for this C wave, right? What I'm going to do is I'm going to measure out the whole thing, and you're going to find some numbers that you probably don't want to see. That would be the C wave down. Sorry. Let me get rid of that. Remove that. Let's do it this way. Bing. Oh, I'm doing it wrong here. IV tools. There. So there. Thank you. There to there to there. So again, we have, if it's going to be a full C wave, we're talking about 14,594. That's where wave C would be equal to wave A. And that would be where this ends. Above that, we have 15,224, 15,614. That all still fits as well. 618 is 16,245. Do I really think it's going to get up there? Man, if they do, I'll be stunned. It'll be difficult to trade it, because I'll just be in absolute astonishment that, against the backdrop of what we have going on in our economy and the world, for them to just decide we're just going to buy this up would be pretty impressive to me. 15,000 would be very impressive to me. 14,500, almost 600 would be very impressive to me. So even as a C wave, I'm only looking for it to break above that level. 741, 805 completes it. 14,000 would be pretty stiff for me to get up to. So we also can see it come up into 618. So the Fibonacci relationships between the A and a C wave are that sometimes C waves only come in at 0.618 or 62% of that A wave. And in this case, that's 13,572. Still a fair piece from where we are. It's 700 points from where we are right now. That can happen. Actually, it's more than that. It's 1,000 points from where we are. Can it get there? Sure. Sure, they can push it up there, but it would end in a failure because it failed to take out that high. Normally, C waves take out the high or the low of A. In this case, it would be the high. So what we have going up on our daily charts, we've surpassed all of our low level, even the 50s. So what we have up next is the 200 at 13,430. Right, 436, that's the EMA, for 13,710, 7 right in there. That's the SMA. Now you're talking breaking that high. And that then we're up into these levels. Can it do it? Sure, it can. How do you want to trade it? That, I think, is a choice for each one of us, which is why I think, again, I tend to preach and talk about trading without a directional bias. And even if you're trading options, you're putting on positions that reflect trading the premium that's going to be available in the options. And you're just putting on a complete trade. So in other words, if you're selling a call, you're buying the underlying. And if you're selling a put, you're selling the underlying. You know, you're already taking your other side of the trade. And then you're just going to have to do, if you're not exercising it right away or getting it signed right away, then you're just going to have to do some management as the market moves around. So again, deciding how and what you're going to trade, that's up to us as individuals. And it's like, how much premium did you take in, and what's your hedge, and et cetera, et cetera. And there's lessons to give on all of that as well, but that doesn't really reflect this particular update. So back down to that hourly chart. I think that, yes, we likely are going to get to 12,942, and that's just going to be a straight retracement of that decline so far. Now, I don't want to mess up this chart too much, so let's write down 12,942, 13,258, 13,573. Those are pretty high. Could get there. We don't know. Now I want to go over to my extensions. And we already did those, but I want to talk about, yep, gotcha. There to there. And so here we've already passed that one. And here we have 12,937. So once again, it's a double. And the other one, it was only 618. And here it's 200 of a little bit different. This would be the third. This is like we're counting a wave 3 under the intermediate C wave count, or under the intermediate wave 2, it's also a C wave, but it's got to be finishing up in here, and it can finish there. You can finish there, but there's only so many waves I can count, 5 waves. And wave C, if this is wave A and this is wave B, then it's 1, 2, 3, 4, and we're in the 5 and it's subdividing. So on one hand, we could be very close to a market turn here, a major market turn. But you see, there's so much going on and there's just so much move in one direction that you're like, boy, what's going to turn this market? It's what I kind of go through myself. But, you know, I get to a point where it's like, no, the market's going to let us know. It's not, I don't need to get in front of it. I just need to realize when it's happening that it is a turn. And is it what's going to drive it? Well, we've got a bunch of figures coming out this week. Pick one. Then it could be enough to turn it down. We'll wait and see. When it does, from up here with the depth and not of with the acceleration of the market, what they've done to buy it, it just gets under its own weight, sold. So again, this is how I come up with this. It's like, if I'm looking for a turn, how do I think that turn is going to introduce itself? By just slowly kind of rolling over and starting to drop and then dropping? Yeah, it could. But because it's gone up so far, so quickly, that I think the turn is going to be hard and fast. So again, we're getting a little bit, the 20 has not been challenged on pullbacks yet. So that breaking, getting below these 50s, all of that is going to come into play when we start to slide. Right now, the 50 is at 12,760. So 100 points below where we were on the opening of the Globex. These are down at 12,620. We start breaking those, and we got the 200s. Hourly chart, look how nice it's all lining up for just a continuation. Remember, these are considered lagging indicators. So you're not going to be buying a look at that 200 looks so bullish. I'm buying in now. Don't know if you want to do that. If you're not in yet, I would start buying it up here, thinking that we're going to go to new highs, because that I do not see. So anyway, I'm going to leave it all right there. I think our trading is going to get, again, more focused on the numbers that are coming out this week. Again, tomorrow, CPI, 8:30 Eastern, 5:30 Pacific. So before the market opens, we should get some idea of what and how things are going to play out. If the market embraces that number, whether it's positive to us or negative to us, if the market embraces it, get out of the way. Do not stand in front of it. It'll run you over and keep on going. So whether we agree with it or whether you personally agree with it or not makes no difference. It's how the algorithms want to perceive it and how they're going to push those buttons. And what's coming in overnight? That was a big thing about today. What came in overnight? They pushed it down overnight, and then we came back in and like, oh no, we're not. We're going to continue to go up. A little bit two-way trade today. It was nice. And both sides had a purpose, and that it all worked. So tomorrow, I am looking for these levels to come into play. And if anything, if I'm counting this, and this is a third finishing, we get a fourth, maybe down to that 20, and then a fifth up into here, complete this move. All right, I'm going to leave it right there. Our next update will be on Tuesday, the 13th.